Let's work on your practice exam, problem number 5. So in problem number 5, we have this Gold Nest Company of Guangdong, China, is a family-owned enterprise that makes bird cages for the South China market. The company sells its bird cages through an extensive network of street vendors who receive commissions for their sales. The company uses a job order costing system in which overhead is applied to jobs on the basis of direct labor cost. Its predetermined overhead rate is based on a cost formula that estimated $330,000 of manufacturing overhead for an estimated activity of 200,000 direct labor dollars. So at this point, we can calculate the predetermined overhead rate. And our predetermined overhead rate is always the estimated overhead divided by the estimated base. So in this case, to calculate our predetermined overhead rate, we're going to take 330,000 of our estimated manufacturing overhead divided by our base of 200,000 direct labor dollars. So if I take 330,000 and divide that by 200,000, what I get is, that's because it's set to 0 decimals, it works out to $1.65 per direct labor dollar. So that means that whatever the direct labor dollars are, I just multiply that by 1.65, and then I get the overhead that's going to be applied. Okay, at the beginning of the year, we have our inventory balances. During the year, the following transactions were completed. I won't read them because we're going to do journal entries for each of the transactions. So in requirement 1, we prepare journal entries to record each of the transactions. We're supposed to prepare T accounts for each inventory account. Then our inventory accounts are going to be the raw materials inventory, work in process, and finished goods. Then we also do manufacturing overhead and cost of goods sold. We're going to post relevant data from the journal entries to those T accounts, and they're hinting don't forget to enter the beginning balances. They're asking if it's under or over applied for the year, close the balance, and then prepare an income statement, which should be easy once we have the T accounts. So let's get started with requirement 1. Let's do the journal entries. So if we purchase raw materials on account, we're going to debit the raw materials inventory, and we're going to credit accounts payable, and the amount was given to us at $275,000. The next one that we have, number 2, raw materials used in production, $280,000. Materials costing $220,000 were charged directly to jobs. The remaining materials were indirect. So 220 plus 60 is going to total 280. So we're going to debit work in process inventory for the direct materials, the materials that were charged directly to jobs. We're going to debit manufacturing overhead for the indirect materials and credit our raw materials inventory for the total cost of what was taken out, $280,000. Move on to number 3. Or number 3, cost for employee services incurred as follows: direct labor, $180,000, indirect labor, $72,000, sales commissions, $63,000, administrative salaries, $90,000. So we have one total payroll, but we're going to have to break it up. So our direct labor goes into work in process. Our indirect labor goes into manufacturing overhead. Our sales commissions goes into selling expenses. We'll do that sales commissions expense, and administrative salaries go to administrative salaries expense. So we're just going to put in the numbers. The direct labor goes into work in process, $180,000. Manufacturing overhead was the indirect labor, $72,000. Our sales commissions expense is $63,000. That was given in the journal entry. And administrative salaries expense is $90,000. And since they say that they're incurred, they're not paid, we credit salaries payable for the total amount. So just adding them together, $180,000 plus $72,000 plus $63,000 plus $90,000 gives me a total of $405,000 in salaries. Now, before I move on, I want to note the amount of direct labor, because notice my manufacturing overhead is applied at a rate of $1.65 per direct labor dollar. So once again, if I know the direct labor dollars, I multiply that by 1.65 and I get the overhead applied. Well, I do know the direct labor dollars are $180,000, so I'm just going to take note of that number right now so I don't have to look it up again. All right, now I'm going to move on to number 4. Rent for the year was $18,000. $13,000 of this amount related to factory operations, and the remainder related to selling and administrative facilities. So it doesn't say that the rent was paid. So if $13,000 of that related to factory operations, we debit our manufacturing overhead for the amount of the rent that was related to factory operations. The remainder is selling and administrative activities, so that would go to rent expense. So 18 minus 13 gives us 5,000. And the credit is to accounts payable. For number 5, utility costs incurred in the factory are $57,000. Utility costs in the factory are manufacturing overhead. So for that, we're going to debit manufacturing overhead, and we're going to credit either utilities payable or accounts payable. So I'm going to go down. I do not see a utilities payable, so we'll just do that to accounts payable, and that amount was $57,000 and $57,000. Moving on to number 6. Number 6, advertising costs incurred, $140,000. So we're going to debit our advertising expense. And since there's no advertising payable, we will credit accounts payable. And we're crediting accounts payable because it says incurred, not paid. So $140,000 and $140,000. And that's because advertising is a selling expense, so that would never be included in overhead. Number 7, depreciation recorded on equipment, $100,000. $88,000 of this amount related to equipment used in factory operations. The remaining $12,000 related to equipment used in selling and administrative. So for the depreciation that's on the factory equipment, that actually goes to manufacturing overhead. So we debit that for $88,000. The $12,000 for administrative does go to depreciation expense. So I'll debit depreciation expense for $12,000. And the total goes to accumulated depreciation on the equipment. The total of $100,000. Let's move on to number 8. Number 8, record the manufacturing overhead costs applied to jobs. So here's where we're going to need those two numbers. So, as I said earlier, our manufacturing overhead applied is just going to be the $180,000 in direct labor multiplied by a rate of $1.65 per direct labor hour. So if I take 180,000, multiply that by $1.65, I get $290,000. That is going to be my manufacturing overhead applied. Now, whenever I have manufacturing overhead applied to jobs, the journal entry is to debit the work in process and to credit the manufacturing overhead. So that amount is just $297,000 and $297,000. Let's move on to number 9. Goods that had cost $675,000 to manufacture according to their job cost sheets were completed. So basically that's just moving it, if you use my 3-room analogy, that's just moving it from room 2 to room 3. Room 2 is work in process, room 3 is finished goods. So it's basically just going to reduce room 2 and increase room 3. So for goods that are finished, we're going to debit finished goods, and we're going to credit work in process. And the amount is given as $675,000. Looks like we only have 2 more. Sales for the year, all paid in cash, totaled $1,250,000. So we debit cash and we credit sales for the $1,250,000. And finally, for number 11, the last journal entry, the total cost to manufacture these goods according to their job cost sheets was $700,000. So we're taking $700,000 out of finished goods and putting it into cost of goods sold. So we debit cost of goods sold for $700,000, and we credit our finished goods inventory for the same amount, $700,000. Now let's check my work. And we have all check marks. Now let's move on to requirement 2. So for requirement 2, we're supposed to prepare T accounts for each inventory account, manufacturing overhead, and cost of goods sold. We're supposed to post relevant data from your journal entries to the T accounts, and don't forget to enter the beginning balances in your inventory accounts. So the ones they want are raw materials, work in process, finished goods, manufacturing overhead, and cost of goods sold. So let's draw T's for those. I'll just scroll out a little bit here so I don't have that big first column. I'll go out to the right. And the first T account that I'm going to draw is for raw materials. Now that I've done that, I'm just going to copy them. So the next one after raw materials that I'm going to need, work in process, finished goods, manufacturing overhead, and cost of goods sold. So let me just change those names. Work in process, finished goods, manufacturing overhead, and finally, cost of goods sold. So going back to requirement 1, and it said don't forget to put in our beginning balances. So scrolling up here, we have a beginning balance in raw materials of $25,000. We have a beginning balance in work in process of $10,000. And we have a beginning balance in finished goods of $40,000. We wouldn't have a beginning balance in manufacturing overhead or cost of goods sold because both of them would be closed at the end of the period. So once again, let me just put in those commas so you can see the numbers a little bit more easily. Now we're just going to post all of them to the accounts. And it actually looks like I need one more column in here to put in the letters. So I'll be able to put in those letters. And I'll zoom out a little bit so you can see what I'm doing here. So let's go back to the previous part now. To our requirement 1. So for transaction A, we debit raw materials for $275,000. And the credit to accounts payable isn't one of these 5 accounts, so we don't have to worry about it. For B, we're going to debit work in process for $220,000. We're going to debit manufacturing overhead for $60,000. And we're going to credit raw materials for $280,000. That's why I wanted the extra column there. So I could put in that letter, so it'll make it easier for us to transfer to the other accounts. For C, I'm going to debit work in process for $180,000. I'm going to debit manufacturing overhead for $72,000. Sales commission expense isn't one of our 5 accounts. Administrative salaries expense isn't one of our 5 accounts. And salaries and wages payable isn't one of our 5 accounts. So I don't have to worry about the remainder of C. I'm only posting if I see them to one of these 5 accounts. Moving on to D. I debit manufacturing overhead for $13,000. There's no rent expense and there's no accounts payable, so I don't have to worry about the remainder of D. E, I'm going to debit manufacturing overhead for $57,000. And accounts payable is not one of our accounts, so I don't have to worry about the credit. F is to advertising expense and accounts payable, none of our 5 accounts, so I can ignore F. G, I'm going to debit manufacturing overhead for $88,000. depreciation expense and accumulated depreciation isn't one of the 5 accounts, so I can ignore it here. If you want, you can always draw T accounts if you find it confusing to not have the other accounts. Now, for I, we're going to debit finished goods. Oh, did I skip H? I'm sorry. I skipped H. I'm sorry. G, I debited the manufacturing overhead for $88,000. H, I want to debit work in process for $297,000. I realized I skipped H. So H, I am going to debit work in process for $297,000 and credit manufacturing overhead for $297,000. Now I'm at I. So for I, I'm going to debit finished goods for $675,000 and credit work in process for $675,000. Now for J, cash and sales is not one of my 5 accounts, but for J2, I want to debit cost of goods sold for $700,000 and credit finished goods for $700,000. Now that I've put the T accounts in Excel, all I have to do is copy the letters and the numbers. So moving on to requirement 2. For raw materials, my beginning balance was $25,000. For part A, I debited it for $275,000. And for part B, I credited it for $280,000. So it calculates my ending balance of $20,000 for me. So notice that I'm just copying the debits and credits. Now for work in process, my beginning balance was $10,000. For B, I debited it for $220,000. For C, I debited it for $180,000. For H, I debited it for $297,000. I'm very happy that I did not skip over H. And then for I credited it for $675,000. So my ending balance in work in process is $32,000. Now for my finished goods. My beginning balance was $40,000 on the debit side. Then for transaction I debited finished goods for $675,000. And for transaction J2, I credited finished goods for $700,000. So my finished goods now has a $15,000 ending balance. Now for my manufacturing overhead. They don't have us close out manufacturing overhead yet, so I'm just going to copy the debits and credits. My manufacturing overhead at 0 beginning balance. Then B, C, D, E, G, and H. I'm putting in the letters first. So the numbers, 60,000, 72,000, 13,000, $57,000, $88,000, and a credit for $297,000. And finally, cost of goods sold has 0 beginning balance. And for transaction J, we are going to debit for $700,000. Okay, so we see all of those very nice check marks, but my answer is still not complete. Now we move on to requirement 3A. So let's take a note of that manufacturing overhead account. So, is manufacturing overhead under-applied or over-applied for the year? So if we go back to requirement 2, since I know that my manufacturing overhead is going to be on the credit side, I'm going to take the credits and subtract the sum of the debits to calculate the ending balance. Let me move that out a little bit so you can see the formula. And I have a $7,000 balance in manufacturing overhead. So since the balance is on the credit side, it means the credits are more than the debits. And remember, the debits are the actual, the credits are the applied. We can see that the applied is more than the actual. If I sum up the actual, we'll see it's just $290,000. So applied at 297 is more than actual of 290, so applied is over, so it's over applied. In requirement 3B, it asks for the journal entry to close the balance in the manufacturing overhead account. So we have the $7,000 credit balance in manufacturing overhead. We move it out of manufacturing overhead and into cost of goods sold. So in order to do our requirement 3B, we are going to have to debit manufacturing overhead in order to close the account for $7,000. The offset is going to go to cost of goods sold for the same amount because our journal entries always balance. Now, if we post that journal entry, so if I take away all this stuff over here, if I debit manufacturing overhead for $7,000 and credit cost of goods sold for $7,000, now manufacturing overhead is 0, cost of goods sold $700,000 minus $7,000 will give us $693,000. Okay, now let's move on to requirement number 4, and let's calculate our income statement, or let's prepare our income statement. So, in requirement number 4, we're going to prepare our income statement for the year ended. The first thing that we need to do is calculate our sales revenue. In J, we were told that our sales, all in cash, totaled $1,250,000. We can tell right over here from the T account that our adjusted cost of goods sold is $693,000. So our gross profit or our gross margin is $557,000. From our gross margin, all we have to do is subtract out all of our selling and administrative expenses for the year. So now let's go down the list and let's find our selling and administrative expenses. So A, there's no selling and administrative expense. B, we have direct materials and overhead, so there's no selling and administrative expense. But now in C, we have some selling and administrative expense. So our sales commissions are $63,000. And the next one that we have after that is administrative salaries of $90,000. After that, we have D. 13,000 of this amount is related to factory operations, the remainder to selling and administrative activities. So we actually have rent expense of the difference, which is 5,000. Moving on, E, utility costs incurred in the factory is overhead that is not selling and administrative. F, advertising costs, $140,000, that is selling and administrative. Depreciation recorded on the equipment, $100,000. $88,000 is factory operations. The $12,000 selling and administrative activities, so we have depreciation expense of $12,000. H, manufacturing overhead, has nothing related to that. Goods that had cost $675,000 to manufacture. Sales for the year, $1,250,000. So none of that are selling and administrative expenses. And at this point, our net operating income, $247,000. And we have all check marks.